Hey everyone, welcome to another Ask Adam. Adam Bergman, IRA Financial, tax attorney. Hey everyone, Adam Bergman here, tax attorney, IRA Financial. And on today's Ask Adam, waiting to get challenged. Gonna have some fun here, talk self-directed retirement investments, talk anything you want to talk about regarding self-directed retirement accounts. So I'm going to get started in a minute. Just want to give everyone a chance to log on. If you haven't subscribed to our YouTube channel, please do. You get 5 amazing videos, 3 podcasts. You're going to learn a whole lot. You don't have to pay anything. It's all free. And I enjoy doing it. So if you support me, I promise I will do my best and give you the best content I can. So, and there's also some nuggets in there. If you listen to one of my podcasts a couple weeks ago, I gave you a crypto tip on Polygon. And when I taped the podcast, it was at 35 cents. It's at 81 cents right now. So there's another incentive to listen to me and watch me. Sometimes I'm right. Not just about self-directed retirement investments. I got a lot of smart clients that give me a lot of good tips. So often they're really strong tips, and I've made a lot of money listening to my clients. So listen to me, and I'll kind of spread the wealth so we all can make a lot of money in the crypto world. So I'm just going to start it up. There's a lot of questions. I probably received 100 plus questions from clients, and I'll kind of go back and forth. Some are on my phone. Some are on this live chat. So I will get to as many as I can in the next 45 minutes or so. If I don't get to your questions, my apologies. You can always just email me at info@IRA Financial or hit us up on YouTube, Facebook, Instagram, Twitter, and I will do my best to get back to you. So let's start up top. So I need to update Fed and state reporting for LLC and IRA. Okay. Number one, if it's an LLC, you're probably going to want to start with the state. That's where you form your entity with. And then if you're filing a partnership return, you can update it that way if you've already filed your return. So I would start with the state if you have any updates from your formation standpoint. Next question, is a qualified distribution for a Roth IRA state tax-free? Well, if you don't live in New York or California, some states tax capital gains and tax distributions. It all depends on your state, but in the raw sense, you're good. You're not going to pay any tax if you take a Roth IRA distribution. That's another advantage of doing Roth IRAs is if you've purchased stocks or cryptos, even if it's a capital gains tax, if you live in California or New York, for example, you could potentially pay 10 to 13% more on that capital gains tax. Doing a Roth IRA, you're good. You don't care where you live. It should all be tax-free. The state will not tax a Roth IRA distribution. So it's another important advantage of the Roth IRA versus doing a transaction in a taxable account. I get this question all the time, especially now in light of President Biden's new capital gain proposal, which I recently did a podcast on. And it's a very interesting proposal. More information should be presented today or in the coming days. But the question is, if you have more than $1 million of income, whatever that means, what is $1 million? Is it adjusted gross income? Is it just ordinary income? So let's say it is adjusted gross income. Let's say you make 150 grand a year, and then you want to sell your bicycle company or your plumbing company for $1.1 million or 1.2. So now you're over that $1 million of AGI. Is that sale now subject to 43% capital gains, right? 39% plus a 3.5% or so Obama tax on the capital gains. And if you live in New York or California, another 10 to 13%. So you can technically be paying over 50% on the sale of your plumbing business, and you're not even, a super wealthy person, right? You make 100, 150 grand a year, doing great, but you're not super rich. But you sell your business and you finally hit your home run. You waited 30, 40 years to sell your business. You finally sell it for $1 million. Now you have $1 million of AGI and they're going to tax you 43%. We'll see. We'll see where it goes. But the beauty of a Roth IRA is that would not be subject to tax. If somehow that crypto or that stock or that real estate was in a Roth IRA, and you took a distribution, it would be tax-free. So I think the Roth IRA will be the big winner if the capital gains proposal by Biden gets passed. I think that's something a lot of people are going to be looking to take advantage of, whether it's through conversions, whether it's allocation of more investment funds into a Roth. I think that is going to be something that more and more people are going to look to take advantage of. Okay, I'm going to skip the 529 stuff because it's not really a retirement per se question, so my apologies on that one. Next one, if I'm contemplating a small business purchase, does it make sense to open a Roth in my name or borrow money from my wife's IRA using a promissory note and pay her back? So number one, Neil, it's a good question. I would not do any transaction with your wife's IRA. Your wife is disqualified and your IRA is disqualified. So that would trigger a prohibited transaction. Even if you did in a Rob's, the fact that your corporation is owned by your 401k, if your wife lends her IRA to that corp, that could be a prohibited transaction. So I would not do that. You can set up a Rob's, a rollover business startup, which is a solution used by people who want to invest in a business that they'll be personally involved in. And the way it works is the business is owned by a 401k. You roll your funds tax-free to the 401k. 401k buys stock in the company, and the company now has the money to buy business assets, and all distributions or dividends out of retained earnings will go back to the 401k without tax. So it's really the only legal and taxable, tax-free way that you can use your retirement funds to invest in a business you control without triggering a prohibited transaction or a distribution tax. So it's a really interesting strategy. If corporate taxes go up, which they're going to, it's at 21% now, it's probably going to go up to at least 25, if not 28%. So that could put a damper on the Robs because you have to use a C Corp. But it's really the only way that you can get access to those 401k funds without paying a distribution tax and 10% early distribution penalty if you're under the age of 59 and a half. So it's a good option. Definitely talk to your advisor. If you want to use your wife's money for a loan, then you can do a joint venture. I mean, what you can do is you can set up a self-directed IRA. Your wife has a self-directed IRA. You put your money together and buy your real estate or do your investment. And that is probably the more efficient way to do it. Okay, next question from Neil. I bought a rental property with cash last year in an IRA, which has been successful. Great. If I want another, but can only cover about half, can my wife purchase jointly? There you go. So yeah, that's what I would do. Set up a new LLC. You put 100 in, your wife puts 100 in, bang. The LLC's owned 50-50 or whatever the percentages are. The only caveat, Neil, is you'll have to file a partnership return because your LLC is going to be owned by more than 2 IRAs, but all the income and gains should flow back to the IRA LLC without tax. Next question. Does the UDFI exemption in a 401k LLC only appear to real estate debt leverage profits? I made crypto debt leverage profits in a 401k, so wondering if I need to calculate UDFI. Dan, unfortunately you do. The exemption under 514c9 is clear. It only specifically applies to real estate acquisition indebtedness. And there's actually some exemptions from that, like sale leasebacks. So yeah, if you use leverage to buy cryptos, you're likely going to have to pay UBTI tax, which can go as high as 37% on a percentage of your profits tied into that margin. So there goes that. But at least you probably made a whole lot of money this year, so I guess it could be worse. What taxes on an IRA withdrawal be dependent on the state we live in? Texas versus California. Yeah, I mean, if it's not in a Roth IRA, yeah, absolutely. It's considered income. So it's added to your ordinary income, AGI, and you're going to pay tax on it whether you live in California or Florida or North Dakota. So yeah, it's just your residence going to be determining where you're going to pay tax on that IRA distribution. What is the minimum requirement of withdrawal? Is it age dependent? In an IRA, no, you can pull your money out anytime you want. If you're under 59 and a half, you have to pay a 10% penalty along with tax. It's a Roth IRA. You need to be over 59 and a half, and the Roth has to be open at least 5 years before you can get tax-free treatment. In a 401k, you're likely, if you're currently employed by the 401k sponsor, you're generally going to need to leave your job or be over the age of 59 and a half if you want to pull that money out tax-free, or even be able to pull it out. and I shouldn't say tax-free, it would be tax-deferred in the case of a pre-tax 401k. But 401k plans have triggering events. So I know it's hard to grasp at the fact that it's your money and you can't pull it out of a 401k, but it's the rule. So if you still work at your current employer and you have a 401k and you're under 59 and a half, there's no hardship, you're not taking a loan, and you're not doing a 72T election where it's basically a pro rata distribution starting at age 55, you're not going to be able to get access to it. So just be aware of that. Can we gift our IRA in the form of IRA to someone else? So you cannot actually gift IRAs. If you're over 70 and a half, 72 now, you can technically make a charitable contribution of an IRA and take care of that RMD requirement, but you can't gift an IRA. You can leave your IRAs to a beneficiary, primary spouse, non-primary children, but they only get that when you die or are disabled. Well, actually on death. So there's really no way to gift an IRA. I wish there was. Is there any way through investments to convert traditional IRA funds into Roth? Yeah, Bob, 100%. You need to get a value. So whether your assets are in cash, then you clearly don't need a value, but if it's in kind, like real estate, crypto is easy to value, right? Stocks easy to value. Something that's a little bit harder to value, like a investment interest, partnership interest, real estate, you'd want to get a fair market value for that asset, and then you can convert it. The IRS, believe it or not, they love conversions. Even though the Roth will probably be detrimental to the government in terms of tax collection down the road, governments don't care what happens in 20 or 30 years. They only care what happens in the next 4 years, right? Or 8 years if they want another term. So conversions are wonderful because it generates tax revenue. And I'm actually shocked that some of these the COVID stimulation bills like the CARES Act didn't have a provision encouraging people to do conversions like what happened back in 08, 09, where they gave you 2 years to pay the conversion. Why? Because they need revenue, right? They just pumped $5 trillion into the economy in the last year. You're going to need to figure out a way to pay for some of this stuff. They want to increase taxes. Biden's been clear. He's going to increase taxes on the rich, capital gains taxes potentially, maybe even a tax on transportation, miles. So they need money. So maybe they will add a provision in that says, hey, you can do conversions. You can pay it over 2 years. Just give us your money. That's potentially an option down the road. But right now, if you do a conversion in 21, you got to pay the tax in 22. So April 15th. So just make sure you can pay the tax. Obviously, if you're 40, doing a conversion has more value than if you're 90, right? More chance to have that money grow without tax. And then obviously you got to have some faith in what you're doing. If you are not super confident in what you're investing in, then maybe a Roth conversion doesn't make a whole lot of sense because you're paying tax up front for future gains to be locked in without tax. So it's a risk, no right or wrong. Hopefully it works out. I've done a bunch of conversions. Just kind of time, especially in cryptos, when the market dropped. I did a bunch of conversions a couple of years ago. It worked out for me, but let's say it didn't, right? Let's say Bitcoin, instead of going up to 54,000, it went down to $400. Then I would have lost that bet, right? Because I would have paid tax at, let's say 3,000 or 4,000 or 8,000, and now I only have an asset worth $400. So it's like a double whammy. Pay tax on a higher value, and I lost money. So there you go. Adam, when you describe the difference between IRA Financial Trust Gemini product that I have and your new Retire with Choice product with Kraken and Fidelity, thanks. So yeah, we're working on some amazing things. And I'll be clear. I mean, I don't like to be overconfident and kind of be one of these people that have overconfidence. But we do have the best product on the market for buying cryptos in your retirement account. Why? Because it's the cheapest way you can do it. It's a flat fee of $300. You control the crypto on the Gemini exchange. We don't. You have control over the keys. You can move the cryptos off the exchange into a cold wallet that you can then move to a decentralized exchange if you wish and trade it that way, or you can just leave it on your cold wallet. So that's super advantageous. There's no commissions, broker fees. All you do is pay what Gemini charges for buying cryptos or selling. There's no fee to hold it on an exchange. And you have total control. And you also can earn through Gemini, earn some interest if you want to lend out the Bitcoin. So it's a great way. You don't need to use these crazy brokers that some other companies are doing. They're charging you 2, 3, 4, 5%. You can trade anytime you want on your phone. We don't control your keys. We're not involved. It's you. It's the way it should be. This isn't the 1980s where you need to go to a stockbroker to buy stock. So why should you need to call someone on the phone to sell Bitcoin or buy Bitcoin? Crazy, ludicrous. People are literally ripping you off. So we've worked with Gemini on this. We're actually working with Kraken and potentially doing the same thing. And then we're working with Fidelity, where hopefully by the end of the summer, fall, who knows, we're going to offer robo and ultimately stocks, where on our platform you'll be able to do cryptos, real estate, stocks, robo investments, even robo crypto investments, all in one place that you control. So we're super excited. The goal ultimately is to allow you to do all your self-directed investments on one platform and give you the power to control your retirement future for one low flat fee without crazy asset valuation or commission fees. So the Gemini platform's awesome. We're getting lots of people that want to do it. And if you are interested in cryptos, I personally think, and yeah, I'm obviously, subjective. Obviously, I've invested interest, but it really is. You can do your research. I mean, you're not going to find a cheaper, better way to buy cryptos and control the process on your phone and control the keys and do everything you want like you would if it was a personal account. So, Neil, I'm going to go back to you if I can. I appreciate all the love on the questions, but I'm going to try to get to a bunch more because I got so many questions. I want to kind of share the love. If my plan is to invest in cryptos with a solo K, can you explain the funding process? So this is a great question, Jorge. Thank you. So it's super easy. You go on our app, you open an account in the name of the solo K. If you have your own plan, we can still service you. You can still open a solo K account with us, $300. You move, once your account's set up, we do a FinCEN background check, takes a few days because we're a regulated trust company. As part of that process, you'll then send the money to us. We're not a bank, so we use Capital One, and the money will go to Capital One. While that's going on, we're going to send you a link so you can link up your Gemini account that you create. You'd be the authorized rep. This link will then link up that account to your IRA Financial account. You will then, once your money comes to us, we'll then move it to that Gemini account. You'll be notified when that money is in Gemini, and you'll trade. Just go on your phone, buy Bitcoin, buy Ethereum, buy whatever you want, and check it out every day. I know when I wake up, first thing my kids and I do, what's Bitcoin? What's Polygon? Or whatever we're buying. So you can do the same. It's your cryptos. You can control it. You can pull it off the exchange if you wish. You can even do Gemini Earn. And best of all, flat fee. You control it. Can't lose. It's just a really streamlined approach to cryptos. And it's in the name of your 401k, which is super important. And this is a point I want to make. If you use an LLC, which I've done, listen, I've been in crypto since 16. I have a Coinbase account still in the name of an LLC with like a whole bunch of gains in there. And I've just been kind of lazy in getting it off the exchange into a Gemini or a cold wallet, just whatever. I got a bunch of different accounts, just my bad. So I had to use an LLC because Coinbase still doesn't allow you to buy cryptos in the name of an IRA that you control. We're working with Coinbase on that, something that we hope to launch shortly through an API with them. But as of now, you got to use an LLC. Same with Kraken, which is unfortunate because it is an extra cost and there is some time delay in opening that account. So ultimately, the goal is to do away with the LLC so you can buy directly cryptos on an exchange in the name of your retirement plan, just like you can do with stocks. So with our Gemini platform, you can do it in the name of the IRA or 401k, so you have no 1099 issues down the road. If you sell it, it's clear from the exchange's perspective and the IRS perspective that there is no tax, no 1099, no reporting because it's a retirement account. So thanks for that question, Jorge. Police Assessment Center prep. Nice. I purchased a home using my self-directed IRA, which I funded with my 457 account. I want to personally purchase a home out of the SD IRA. How do I establish value? Okay, great question. So it needs to be independent. So there's a couple ways to do it. You can go an online source like Trulia, Zillow. Some people use the tax records. You can hire a realtor to provide a letter. I don't think you need to go like full-blown crazy independent appraiser. What I suggest is use all three, Zillow, Trulia, taxes, maybe a fourth, and use the highest. So this way, let's say Zillow has you at 100, Trulia has you at 98, tax record has you at 96. Use that 100 valuation just to show the IRS that you are being, as fair and reasonable as possible. Don't have to. You can be more aggressive and take the lower one or the average. But if you take the higher one, I doubt you're going to have any issues with the value. You then pay tax on that value. Remember, if you're under 59.5, you're going to have to also pay a 10% penalty on top of the income tax. And it's just ordinary income that just gets placed on your 1040, and you're going to pay tax on it, as well as any state tax, depending on where you live. So just be cautious. If you're over 59.5, it's just income tax, no 10% distribution early penalty. And if it's in a Roth, so long as you're over 59.5, the Roth's been open 5 years, you're good, tax-free. So to answer your question, yeah, I would choose at least two sources: independent, Zillow, Trulia. Get a realtor to give you a letter based on his or her position on value. Make it independent, and then you don't have to do anything more. Pay tax on it, and if you ever get audited, just make sure you have the support for your value somewhere handy. David, I'm thinking about a brokerage account for an IRA LLC. How should it be taxed? So it depends on your LLC. If it's a single member LLC, the automatic default is disregarded entity. If it's a single LLC, if it's an LLC with two or more partners, the default is automatically a partnership. So depending on what you want to do, like TD Ameritrade actually has a specific application for self-directed IRA. So if you can't find it, let me know. I'll send it to you. And also that's what we're trying to accomplish with our new Fidelity app/robo equity platform, which we're going to launch this year, is that you'll be able to do it through us and Fidelity. You're not going to have to go to TD Ameritrade to open a brokerage account. You can do it through us and buy Tesla, or even do some cool robo ETF stuff. Okay, another question. New to the concept, Adam. Adam, thanks for the question, but I'm interested in being able to invest in crypto and real estate and IRA. I'd appreciate a general overview of self-directed IRA options. Okay, Adam, I'll keep it brief. You got two options. You can do a self-directed IRA, or you can do a self-directed IRA LLC. The LLC is great for real estate, or it's great if you want to buy cryptos on an exchange like Kraken or Coinbase that doesn't allow you to buy cryptos in the name of the IRA directly, like Gemini. So there's no right or wrong. The IRA, self-directed IRA, is the standard one, just doesn't have the LLC. Same investment options, but you have to kind of go through the custodian for everything. LLC gives you more checkbook control, meaning the LLC will have its own bank account that you as the manager control. So you can write checks a little bit quicker, have a little bit more control. Still same prohibited transaction rules. If it's a single member LLC, meaning the LLC is owned by one IRA, it's a disregarded entity, no federal income tax, state tax filing. Returns, you still may have some franchise returns like Texas, Tennessee, or some obviously annual filings, whether it's Florida, $150 or so, and California, which is a minimum franchise fee of $800. So you also have some annual filing requirements, but the LLC is great if you're doing lots of transactions like rental, flips. Not necessarily, again, if you're doing Gemini cryptos, or you're just kind of doing one-off investments like private equity, hedge fund, or just land, or just a home, and you're not going to have much transaction activity because you'll have a management company handle most of the activity. It's whatever works best for you. The difference in price is you just got to pay the upfront fee for the LLC. It's a one-time fee, costs generally about $9.99, and then after that, it's just $300 flat either way. So again, it depends how much control you want, the frequency of your transactions. Privacy, that's another element. Some people like to have privacy. They don't want people to know that the investment's owned by an IRA, so they'll set up an LLC, call it XYZ LLC, and then do investments that way. So that's kind of the answer, Adam. So appreciate it. Bookkeeping, it's generally not an issue. The bank account has all the bookkeeping you're going to need, right? Cash in, cash out. That's all you're going to need. Bob, hi, Adam. Is it okay to invest in property in another country? Yeah, the tax code only says what you can't do, which are collectibles like art, insurance, life insurance in the name of an IRA. 401ks can potentially buy life insurance. And thirdly, self-dealing, buying a house and living in it, or entering any transaction with a disqualified person, which is basically you, lineal descendants, or any entities you control. So yeah, there's no prohibition against buying real estate in a foreign country. Just make sure you understand local rules about ownership, taxation, and the like. David asked, Adam, there's a lot available to view on the web in terms of basic. Good luck with it. Thank you. Okay, I got you, Adam, before. Deborah says, okay, so this will be taped. It's not going to be challenging questions. I promise you, Adam. We're going to do basic stuff. I hope I tapped into some of your basic questions. I try to answer the questions I get. So if I'm getting tough ones, I'm sorry. I'll keep it basic, Deborah, I promise. Sorry about that. I'm just I get carried away. I love talking about this stuff. So my apologies. I try to keep it super basic. I promise. Hi, Lewis. What documents do I need to provide title company when I sell my rental? So it all depends. If it's an LLC, you're probably going to just provide the LLC documentation, operating agreement, formation docs, maybe an EIN. If you have the real estate owned in the name of the IRA, because again, remember, you can do real estate in two ways. You can use a self-directed IRA, or you can use an LLC. If you use an LLC, then you'll provide them the formation docs. If you are using a regular IRA, okay, then you'll probably need to provide them some of the documentation regarding ownership, title documentation, and the like. So it all depends on how you've structured this. Okay, Neil, man, I love you. Keeping up with the questions. Okay, is there any way for a high-performing real estate rental asset held in an IRA to be moved out and provide the cash flow? Yeah, just take a distribution, right? Pay tax on the fair market value. Use whether it's Trillia, Zillow, real estate, independent source. Get that thing valued. Quick claim it to yourself in your own name. Bang, it's yours. That cash flow is yours now, and just pay tax on the value. George, I am a California resident. I want to create a trust instead of an LLC to manage my IRA. Are there any implications? Okay, George, I really, really appreciate this question. I get this a lot. In fact, we were probably the first company to allow clients to use a trust back in 2010. We basically stopped doing it. Why? Because it doesn't really solve your problem. Why would you want to set up a trust instead of an LLC in California? Well, the thought is you're going to get around the franchise tax, right? California has a minimum franchise tax of $800 for all entities that do business in the state. The problem is, according to the state, they will deem your trust to also be subject to the franchise fee. Okay, so California is super, super aggressive when it comes to franchise fees. They love their money, they need the money, and they're aggressive, just like New York. But California has the most expensive franchise tax in the country, $800 minimum. Even if your LLC is dormant, has nothing, no activity, it still has to pay an $800 fee to the state for the privilege of doing business in that state. Is it worth it? I don't know. But if you live in California and are a resident and you want to do something in California, like own real estate, which will have a nexus to the state of California, you may not have a choice. So unfortunately, George, in my estimation, and I've talked to California Council, multiple council, ERISA and tax, state, local, the trust would be subject to the franchise fee. Now, I've had clients do it in Florida, for example, and say, hey, I want to use the trust for different reasons, more privacy. I believe it works. It does. And because Florida doesn't have any state tax, you still have to file a grantor trust 1041 and a state trust return, but you can basically just file a one-line letter stating that you're a grantor trust and don't have to complete it. And you can technically get around the franchise, well, the filing fee of Florida, which is like $140. So but you don't get limited liability protection. So you get more anonymity and privacy, but you lose limited liability protection. You don't really save anything. So honestly, I don't think it's worth it. We've done it for clients not in California. We've done it for clients outside of California, like Florida. But I'd say out of like 28,000 clients, oh man, I'd say less than 5 people have done this, maybe 10. It's not worth it. It's complicated. You get all these complicated trust returns, potential tax implications. Then you got trust laws. It doesn't satisfy the exemption for franchise fee as far as I'm concerned. So you still have to pay the $800 fee. You get privacy, so that is the issue. But you can always set up an LLC and then have the LLC own a land trust and have the land trust buy the real estate. That's one way of doing it. Same with Florida, right? Have a Florida LLC that is the grantor on a land trust and the beneficiary. You're the trustee on the land trust, and then the land trust can buy the real estate. But personally, I would just stick with the LLC. That's just my thing. Oh, man, I got a lot of questions. I'm sorry if I'm going a little too slow. I know I'm trying to keep it basic. I kind of lost my place. Let's see where I've ended up here. Okay. I read about the backdoor Roth IRA conversion. When you open a new IRA and then convert it to Roth, does an inherited IRA, you can't do backdoors with inherited. If it's inherited from a spouse, then you can put it in your name and then do a conversion. But if it's non-spousal, you can't do any conversions. You're stuck with the inherited IRA. What if you live in Puerto Rico, for example, and have some tax exemptions? Would you benefit from the withdrawal? Yeah, I mean, it depends on your residency. If you can satisfy residency at Puerto Rico and you have that 183-day Act 22, I believe, yeah, you should be able to reduce taxes on IRA distributions. You just need to make sure you're satisfy the Puerto Rico residency requirements. You should be able to do that. I've talked a lot. I'm actually speaking at a Bitcoin conference in June in Miami. It's one of the largest Bitcoin conferences about taxation and actually Puerto Rico. They asked me to talk about Puerto Rico taxation and crypto investors because there's a big community of crypto investors that are moving or have moved to Puerto Rico to be exempted from capital gains tax from the sale of cryptos, and then also minimize any potential corporate tax from dividends received from Puerto Rican companies, or actually setting up companies in Puerto Rico, hiring at least 5 people in Puerto Rico, and eliminating any U.S. tax on that income. So there's definitely a trend. Again, it has to work for you. Obviously, you got to live in Puerto Rico 183 days, or at least, I believe it's like 500 and something days over a 3-year period, at least 65 days in each year. So there are formulas you got to satisfy, but it's possible. I have a bunch of clients that have done it. I actually have a few friends that have done it too. And they're okay with it. They go to Puerto Rico, they spend, 4 or 5 months there. They like it in the winter. And then they travel, they go back to the US, they go all over the world, and they're happy and they pay less taxes. But, for me, I have young kids, so my wife's probably not going to let me do it. But if my kids were older, I would do it. I would, especially with lots of built-in gain tax for cryptos, I would totally do it. Puerto Rico is a great place, really cool people, beautiful country. So, or I don't say country, I would say territory, maybe even a state one day, but it's a beautiful place. So it's really a cool option, I think. I set up my Kraken account within 10 days. My application at Coinbase and Gemini still outstanding. It's been over a month. Well, Eric, call me, because if you do Gemini through us, you'll get it done in 2 days. So you must have done it through an LLC at Gemini. If you move that money from your LLC back to us, we can fund your Gemini account in days. Coinbase, Coinbase is super, super slow now because they're so busy. And Kraken, we have a better connection there. So we should be able to do it in quicker than 10 days. But let us know with Gemini. You may need to move that money out of the LLC back to us. And then we'll fund the Gemini account directly in the name of the IRA instead of your LLC. And I know we can do it much quicker. How is Gemini different than Kraken? Different exchange. So there's different exchanges. I actually had this conversation with my kids yesterday. They're all confused with exchanges. Is it a company? Is it a crypto? What's the deal? Because actually Uniswap, which is a decentralized exchange, also has a coin, Uniswap. But it's not the exchange, just a coin. Binance has a coin, right? It's an exchange. So Gemini is like the New York Stock Exchange, and Kraken's like NASDAQ, but that you both can buy the similar cryptos on it. So you just need to go on each site and see what they support. Gemini supports most of the big ones like Bitcoin, Ethereum, Litecoin, but Kraken supports more of the altcoins, smaller coins, maybe like XRP, and Chainlink, Uniswap. Actually, Gemini also does Uniswap, Polygon, Polkadot, things like that. So just check out what coin you're interested in, and you can Google it, and then the exchange will come up. They each have different fees. Coinbase is the biggest now. They just went public, got like a $68 billion market cap, which is great. The more money these exchanges have, the better, because they're going to have more resources to put in security, more resources for insurance, right? That's also another difference between a centralized exchange like Gemini, Kraken, Coinbase, and a decentralized exchange, which doesn't have the regulation of a centralized exchange. A decentralized exchange basically allows you to connect your wallet to other people. And so long as that decentralized or DEX exchange carries or supports your coin, you can transact pretty quick and less costly, but you have less security. So that may be the hang up. And it also supports only fewer coins, whereas centralized exchange are larger, more regulated, but they also do get hacked. So there are also those issues, although the bigger they get, the less chance that if they do get hacked, they won't make you whole and put back any lost cryptos or money that you may have lost. So I'm all about doing that. Actually, that was one of my bad investments. I hit a home run with Polygon, but I chased Coinbase. I bought their IPO at 409. Don't ask me. Now it's like 300, 302 or whatever. So I took a bath there. I lost a whole lot of money, but I'll see what happens. I thought it would run to like 650 and it died on me, but I still got my Polygon, my Bitcoin, my Ethereum. So I'm still doing really well, but kind of got hit on that Coinbase thing. I transferred an existing Roth IRA from Vanguard IRA Financial. Does the restart for 5 years? There's no restart. Once you have a Roth IRA, you're good. So I always tell people when you hit 18, just put $1 in a Roth IRA, or when you're in 25 or 30 or 50, just put $1 in a Roth IRA because it starts the Roth IRA 5-year window. There is a different window for 401ks and IRAs and Roths, but once you have $1 in a Roth IRA, you're good to go. That clock is going, and once you hit the 5-year clock, it's finished. You don't need to redo it every 5 years or for different accounts. How long does it take from a call to an account? Depending on what you want to do, Gemini, and it really also depends on how fast you move your money. Believe it or not, TD Ameritrade is taking like 10 days plus to move money. And also, believe it or not, entities like Vanguard, they still make you fax in transfer authorizations. Like, these institutions do not want you to move money out. They don't want you to leave their institution. I can't blame them, but they're losing money. They are getting new accounts too, but the self-directed industry is definitely pulling money from them because people want to diversify. They want to buy alts, and they're stuck in their old ways, these old financial institutions that scare people off from doing alts. So that's my passion. That's my dream, is to build one platform where everyone could do self-directed stocks, self-directed real estate, self-directed cryptos, everything on one place for one low flat fee. You have control and not be at the mercy of these large institutions that really couldn't care less about you, which drives me crazy. They always say, oh, we have fiduciary obligations, best interest. We won't let you buy alternatives, it's too risky. But hey, I bought Coinbase stock and I lost $100 a share. Lost like $40,000. So there's always risk. So it just drives me crazy how these institutions think they're so much holier than everyone else, and only they know what's best, and only they can make investments for you, and you're not smart enough to do things on your own. It drives me absolutely crazy. Can retiree with no income contribute to a Roth? If their spouse's income, yeah, you could piggyback off a spouse, but if you have no income, Dave, you can't make contributions, even to a Roth. Michael, I opened a solo case, still need to make 2020 employee contributions. You can do it, technically, depending. If you're a sole proprietor, you technically can do it until May 17th. If you set up your plan in 2020, 2021, excuse me, for the 2020 year, you can only do employer contributions. If you set up your plan before 2021, you can do employee contributions, pre-tax or Roth, sole proprietor, or single member LLC. Technically, if you're a W-2, you should have gone your W-2 already for your 2020 taxable year. So that ship has probably sailed. But if you're a sole proprietor or single member LLC and you set up your plan prior to 2021, you should be able to make employee deferrals. Single LLC member dies and owned by an IRA, how to avoid probate. The beneficiary form will control. So have a will. The will should tie into your beneficiary form. Believe me, the beneficiary actually trumps the will. So if your beneficiary form, I've seen this, believe it or not, I've seen it where an ex-wife is still titled as the beneficiary primary, and then obviously the will had something else, and there was a big issue, and the beneficiary form actually had the authority over the will, and it actually served. The ex-wife got the money. So then what happened is the current wife said, well, that's not fair because what the rules technically are is that if you leave your money to a non-spouse, the spouse has to consent, which she was right as well. So they actually settled and made a deal. But if you want to basically avoid that, just check your beneficiary form. If you have a family change situation, change in family dynamic, divorce or death or whatever, God forbid, make sure the beneficiary form is accurate. You should check it every year, and if nothing happens, then probably nothing you need to worry about. But if something does happen in your life from a marital standpoint, you should update that form. It's super important. Oops, lost our background. I guess we're going on too long. Okay, there it is. We got it. Okay. Let's get some other cool questions. I actually got some I want to get to because I got so many on my phone. So I do want to get to them because I promised people I'd get to it. Okay. Michael wants to know, I have a self-directed IRA. I purchased a farm with 200 acres. I've leased a property. I would like to eventually purchase the property from the IRA personal name. So basically he wants to use it for personal purposes. Land is an interesting question because you can technically rezone land, right? If you have 100 acres, you could potentially say, okay, I'm going to take 20 acres and then have that titled into my name and keep the other 80 acres in my IRA. And so long as it works from a land standpoint, it's possible. Can't do that for a house, right? You can't say like I'm taking the bathroom in my name and the rest of the house is staying in my IRA. This doesn't work. So from a land standpoint, you can do that. You can have it retitled and parcel up that land, own some of it in an IRA, some of it personally. It works, but it really doesn't work well if you're doing it for a home or an apartment building, anything like that. Okay, I got this. Jeffrey, I know I owe you these questions. I've encountered a vendor who's rejecting the LLC as an owner. May I set up an account with this vendor using an owner such as IRA Financial Trust, FBO, the Jeffrey applied to IRA? I know the ownership is acceptable to the vendor. Yeah, I mean, listen, you can title this in the name of the LLC. Most banks have no issue, especially if you use Capital One, which we can actually open the account for you. That's fine. If it's a vendor like an investment platform that doesn't want the LLC, then fine. I don't care. If they allow you to title it in the name of IRA Financial Trust for the benefit of, Jeffrey IRA, that works. Okay, that's fine. Just don't title it in your personal name. Just don't make sure it's Jeffrey IRA, or Jeffrey Smith or whatever your name, Jeffrey. I don't want to say your last name, but don't do it in your personal name. Don't use your social. Just make sure you're using your either the tax ID number of IRA Financial Trust for the benefit of you, get your own IRA tax ID number through the IRS, or use your LLC. I'm fine with either way. It's rare that the provider will take the FBO versus the LLC, but hey, if that's what you're dealing with, then it could work. Just make sure that you don't use your personal name. Number 2 from Jeff. If a husband and wife have a joint pre-tax IRA, can funds be moved freely from the entity to pre-tax owned solely by one of the parties? So this is a question, good question, Jeff, where you have an LLC partnership, right? Let's say 50-50 owned by Jeff IRA and his wife's IRA. Now you want to move some money to another LLC. Technically, there's a few ways to do it. One is you could have a contribution of one partner to a new LLC. There could be a distribution, pro rata distribution, where both parties get the cash and then one recontributes back to the existing LLC. The other one recontributes to a new LLC. There's all kinds of ways you can do it. As long as that money doesn't end up in your pocket and it's staying within the IRA family, Jeff, you'll be able to do it. Just let us know if you want more details, but it's doable. Okay, I got a few more. This will be taped. This is on YouTube. It will be live. You can watch it anytime. So I just want to make sure that's clear. I got a bunch of questions. Another question: would it make any sense for me at 71 years old to do a self-directed real estate IRA? So it's a great question. Basically, and thank you. I don't want to miss your name. Thank you, Murray. So yeah, at 72, you could still make IRA contributions based off the Secure Act. As long as you have income, you can still make IRA contributions. So that's good. But at 72, if you have a pre-tax IRA, you have to take what's called required minimum distributions. That age has moved from 70 and a half to 72 recently by the Secure Act. So that means, Murray, that you're going to have to start taking about 3% of your value as a distribution each year. So let's say you have 100K in your IRA. If you invest 100K in real estate, you want to make sure you have at least a few $1,000s to cover that RMD. Now, if you have other IRAs that are invested in stocks or ETFs or other assets, you can satisfy the IRA RMD from any IRA account. So that's something to keep in mind. Now, if you have enough cash in other sources, then yeah, you should do a self-directed IRA if you wish. If you want to diversify, if you believe in what you're investing in, by all means, you should do it, or you could do it. It's your call. But just make sure you have enough cash left over so you don't have to sell the property to cover the RMD. You want to make sure you have enough cash flow. So thank you so much for that question. Oh, sorry, that was from Randy, not Murray. Murray asked a question too. He's 81, has several qualified plans from which I use approximately 50% for RMDs. I'm 3.5 years into a Roth IRA. There's a lot of money in it. I'm redoing my estate planning to designate the bulk of my IRAs going to family charitable foundations. Question is, after 5 years waiting period, what is the current long-term or estate use of Roth IRA? So after 5 years, it's tax-free, right? So that's gold. It's essentially cash gold, right? Because you're not paying any tax when you pull it out. So the idea is, hey, if you don't need the money, you want to leave that potentially to your heirs, who then have, if it's a spouse, she or he would be able to use those funds tax-free anytime. And then when that spouse passes, your children would be able to use it tax-free for 10 years. So I would probably not send the Roth to a charity personally. Probably keep it in my estate, have my spouse or my kids use it because it's tax-free. Charities don't pay tax, so they don't really care about Roths or not. That's kind of my call. That's what I would do. So thank you for that. Can you start a Roth IRA outside of a 401k if working? Great question. That's based off income limitation. So if you have access to a 401k, if you're married finally jointly and you make more than 208k, you cannot do a Roth IRA, but you can do a backdoor Roth IRA, which is the workaround, where you make an after-tax IRA contribution, 6 or 7k if you're over 50, and then immediately convert it to Roth, and that's how you get around the income limitations for the Roth IRA. Just note that if you have other pre-tax IRAs hanging out there, you may not be able to convert all of it to Roth because there's a pro rata formula. Okay, I'm getting close to the end. I'll do it for a few more minutes. I still have a lot of questions, but I don't want to go too far and put people to sleep. Want people to come back in the next month or so with more questions. So I'll do this, keep going, have some fun for another few minutes. I have some Bitcoin and equity trust, and I moved that over to IRA Financial. They're killing me on fees. No comment. You could, sure. I know Equity Trust. It's a great firm. They've been around a long time. Nothing, but positive things to say about them. You can probably, from what I hear, you're going to have to sell the Bitcoin, go into cash, and then move it to us. I know they're making it kind of difficult to move the cryptos to us or to another institution. So you're just going to need to work with them. There's some security issues on that. We're happily would love to take your account and love to work with you. So just make sure you work with Equity, and we can make that happen. We can receive cryptos into a wallet. You can receive it directly into your Gemini new account wallet if they allow, but you're just going to need to work with Equity on that. And that's what we're trying to solve, is make this easier. We don't want to hold your money hostage. We don't want to hold your cryptos hostage. We want you to have control through a licensed regulated exchange where you can buy the cryptos on your own without having to go through us. So I know Equity is a good system, a good platform, but the way we've kind of separated ourselves is we don't want to hold your cryptos. We'd rather you do it. It's your money. Self-directed account, after all, right? Isn't that what you're doing? Isn't that the whole point of this, is that you have control, not us? So we took a bit of a different approach. We are charging less fees. And again, it's something I believe in strongly. So that's kind of what we've done. Can I buy crypto in my 401k through an offshore exchange like Binance? Yeah, you could. As long as you're going to have to set up an LLC like Binance. Won't allow you to do an IRA directly. It's an offshore account. They don't care about IRAs. But yeah, if you use an LLC, you'll be able to do an account through Binance. We're actually working on some other partnerships with other foreign exchanges that have a lot of altcoins that we're going to hopefully announce soon. Same with decentralized exchanges. DEX are some really exciting, I think, developments there. And I think that will ultimately push the centralized exchanges to reduce their fees, right? The exchange fees are still somewhat high. They're still charging 30, 40 basis points upwards, close to 1% in some cases. That's going to drop, right? You're going to see that with Coinbase going public. Gemini is going to go public. Kraken's going to go public. They're going to have more money. And you're going to see there's going to be a push to move the commissions down. It's going to take is one. Robinhood's doing it now, but Robinhood doesn't have the crypto platform that Coinbase or Gemini has. So that's something that's just going to happen. I got a lot of in-kind distribution questions. If you choose to take Bitcoin out early and take the penalty and tax hit, do you simply transfer it to a new wallet? Yeah. If you want to take the Bitcoin out early for whatever reason, you can, let us know, give us the value. We'll issue the 1099-R and then move it to a personal wallet. That's something you can do. Bitcoin lost 75% of its value in 2018. This can happen again and lost recently 25%. I agree. Absolutely. It's volatile, no doubt. And I always say there's risk. But I personally believe as a long-term investor, the reward outweighs the risk. And yeah, truth teller, you could be right. I don't think Bitcoin will go to zero, but it certainly can go down to 5,000. It was at 5,200 March 15th. So yeah, I'm not sitting here and saying it's a guaranteed win. Everyone's going to get rich, just buy Bitcoin and quit your job and put all your money in Bitcoin. No, I'm 100% not saying that. I'm saying I believe the reward outweighs the risk. So I've taken a small percentage of my net worth and I've taken the diversification angle and say, okay, I also have real estate. I own real estate. I also own gold. I also own diamonds, believe it or not, and different stuff. I'm also going to own Bitcoin and Ethereum and some other Polygon, some other cryptos I really like. And if I lose it, I'll live with it. I don't think it will go to zero. If I lose 25 or 75%, it's the way it goes. But again, I can wait it out. I'm 45. I'm not selling this stuff for 15 more years. So if this is a big Ponzi scheme and it's all zero, my life's not going to end, right? I lost 1-2% of my net worth. Okay. I'll get up the next morning and I'll live another day. But I wouldn't tell people to put all your money in cryptos, truth teller. I agree with you. Super volatile. The technology is still developing. Is it a crypto? Is it a currency, right? Is it a store of value? Is it really a store of value? What's the value? Is it a Ponzi scheme? Why is it better than gold? You can't use it for anything. All fair points. We'll see where it goes. I think the one thing that's really exciting is the NFT, the non-fungible token market, that's now starting to emerge and showing that, hey, there's actually a useful utility for this technology. I just saw yesterday, Golden State Warriors, a basketball team, So they were the first team to issue their own NFTs. You saw artists, musicians. You're going to see more and more people develop NFTs as a new source of revenue. And I think as a 45-year-old, maybe I don't understand it, but I can tell you my kids will understand it. And that's the future. So who knows? But again, I think the reward outweighs the risk. So that's my play. If I get Gemini through an IRA and you form partnership overseas, will those be able through the $300 fee? Yeah. It's all going to be $300. Whatever you do, I don't care. We're going to charge you a flat fee, no asset fees, no commission fees. In fact, down the road, we're going to add or reduce some other fees that we're going to be excited to announce hopefully soon. Keep this as flat as possible so you can really keep all that money you earn yourself, right? Anytime, remember this. If you pay a broker to buy Bitcoin or Ethereum 1, 2, 3% on the in and out, that means you're already down. You're in the hole 2 to 4%. So your cryptos are going to have to grow at least 4% just to break even. So we don't want to do that. In most of our cases, our average account's about $152,000, $300. Do the math, right? It's 2 basis points, 0.2% basis points, I should say. So hardly anything, much lower than you'd pay almost anywhere else. Does it violate an IRA rule to have my wife as co-owner signer on my IRA bank account? No, you can. She's the manager. Under the Swanson case, it says clearly that the IRA holder can manage or be a director of an entity. So you can certainly do that. In your opinion, does the delayed tax protection of a 401k actually provide value in the future? In other words, is there a likely risk that capital gains taxes will only get worse, but not better? Geez, I hope not. And that's the play, right? A lot of people say, Adam, I'd rather own real estate personally because I'm going to get capital gains on that asset. And I agree. In most cases, you're right. If it's not a Roth we're talking about and you're talking about a pre-tax IRA, then owning real estate personally could have advantages, right? You get depreciation deductions, other expenses. You also get a capital gains at the end of the day versus ordinary income in an IRA. But remember, not all people have the privilege. Some people just have more money in their IRA than they otherwise have personally, and they have just no other way of using those funds in a way that makes them comfortable. So it's not I'm Warren Buffett and I have $1 billion, $60 billion personally and money in my retirement account. What should I choose? For some people, it's not a choice. It's like, hey, I want to buy this house. I only have 40 grand personally. I got 200 in my IRA. I want to buy it. Bang. That's the way I'm going to do it. I want to generate deferral on all the rental income. And when I take a distribution or sell it, if I sell it, it will go back into my IRA without tax, further enhancing the value of deferral or compounded interest. And if I take a distribution and then pay tax on it, it's ordinary income. Obviously, in a Roth IRA, 59.5, 5 years, tax-free. That obviously will trump a real estate personal ownership. But pre-tax IRA versus personal ownership, yeah, it depends on what you're going to do. Depends on your taxation, rental income, depends where capital gains goes. All these things I agree on. But not everyone has that choice. Some people just want to do the deal. They feel more comfortable owning real estate in an IRA. They don't trust the markets. They don't trust Wall Street. They just want to do that deal. And again, who knows where your tax brackets will be when you take the distribution. So good points. That's why I'm a Roth IRA lover. The book I wrote, "In God We Trust and Roth We Prosper." Like, if you can get Roth, then you don't have to worry about tax brackets. Your Roth IRA will beat your personal tax play anytime. Yeah, you won't get tax deductions, but you're not going to pay any tax. So that to me is more advantageous. Any future books planned? I'm working on one now. I'm updating my crypto book. I wrote the first book on how to use retirement funds to buy cryptos started working on it in 16, got published in the beginning of 18. I'm working on the update, which should be ready in the next month or so. So that should be coming. Is it a good idea to put crypto, earn a Gemini? Listen, the rewards are valuable and very attractive, right? You can get 5-6% in a low interest rate environment. That's awesome. Is there risk? There's some risk, I guess. I mean, you're lending out your cryptos. Gemini is a huge exchange. They're regulated, licensed, but it's definitely riskier than holding it in a cold wallet. But you are getting some interest on the Bitcoin. So I don't think it's a huge risk. Again, as these exchanges get more more money, more value as they go public and just have a bigger balance sheet. There'll be better protections for all their clients. So I don't think it's a huge risk to do the earn. We've had a lot of clients do it. I think it's a cool play. We've actually talked with some other exchanges like BlockFi too that we're working on offering that as well. So that's in the works. In the future, I'd like to be able to watch the stream live at 1.5 speed. Why? I don't talk fast enough. Everyone tells me I talk too fast. I get too excited. So thanks, Adam. You're probably joking. Can we move Bitcoin to a wallet out of my Gemini IRA without taxable event? Yeah, you could. You can own, there's nothing in the tax code that talks about the fact that cryptos need to be on an exchange. Only precious metals have a physical possession requirement in a trust depository or bank. So yeah, just use a separate wallet. I would have someone else. We can buy the wallet for you and ship it to you. Don't use personal money to buy it. Have a friend buy it, or let us buy it. We'll buy it for you and ship it to you. And then just have that marked as a separate wallet. So you don't commingle any cryptos. I think that is a good idea. Got a lot more questions, but we're getting up against a deadline time-wise. I'll do like one more. So I can keep going forever. I love this stuff. And I appreciate all the support. You guys are awesome. Really, really appreciate it. I mean it. Like, you guys keep me going. I do 3 podcasts. I have like 5 videos I do a week. And I know you guys appreciate it. So I actually love doing it because I really prepare for this stuff, and it keeps me super focused, and I learn a lot from you guys. So thank you. If you roll over a Roth IRA into a solo K, a Roth 401k, right? You can't roll a Roth IRA. You roll a Roth 401k into a solo K. Does the 5-year reset? Yeah, you got to do another 5-year. If you go if you go 401k to 401k, no, you already have your 5-year. Sorry. If you went from a Roth 401k to a Roth IRA, you'd have to redo your 5-year. So sorry. Mike, I have a simple IRA for my employer. I also have a solo K with IRA Financial. Can I transfer fund from Symbol to Solo? After 2 years, you could. The simple IRA needs to be open for at least 2 years. Mike, make sure you don't make contributions to both in the same year. There's a one plan exclusive rule. Your simple IRA needs to be open for at least 2 years, then you can move it to the Solo. Does Coinbase also offer Earn? I believe they do as well. And same with BlockFi. Appreciate you. Thank you, Adam. I appreciate you, man. You're awesome. Can I buy a piece of property with a traditional IRA and a Roth IRA? Yeah, you can, James, you can do a co-venture between your pre-tax and your Roth, just pro rata. That means if your IRA owns, your pre-tax owns 75,000 contributed and your Roth contributes 25,000, it's pro rata 75-25. All profits and losses and distributions go pro rata. Thank you, David. Appreciate it. I paid 5% recently to exit my crypto position in a different IRA. Oh man, Eric, I'm sorry, dude. That's just not right. I mean, that's like criminal. I mean, I would go to like the BBB. I mean, that's not right. I mean, I would be calling them up and saying I want 4% back. They have no right to be charging you 5%, right? That's insane. But say you had $100,000 of Bitcoin, you pay $5,000 in fees to make an exit. That's like criminal. I mean, that's crazy. In fact, I would call the FTC, the Federal Trade Commission. Like, people should know about that. That's not right. And I don't care who the company is. That's not right. I'm sorry. Thank you, Michael. Any clever ways to put more than 7 in a Roth? Yeah, it's called a solo 401k. If you're self-employed, John, you can do a Roth solo 401k and put 19.5 or 26 in a Roth, or you can do a backdoor Roth 401k and put 58 or 64.5. So if you're self-employed, John, there's tons of great ways you can supercharge your 6 or 7. Remember, it's 2021, May 17th. You can do 12 or 14 if you're over 50 for 2020 and 2021. So you can supercharge it this year. But if you already did 2020 and you want to do 2021 at 6 or 7, if you're self-employed, you can go all the way up higher to potentially 58. Oh man, I got a couple more. Where do we find your podcasts? You can get them on Apple, Spotify, SoundCloud. You can even listen to them on YouTube. So subscribe to IRA Financial on this channel. Just hit the subscribe button. Or if you go to Apple or Spotify, click the subscribe and you'll get notifications when I drop podcasts. I usually do ad bits on Tuesday, Adam Talks Wednesday, ad mail on Thursday, and then I drop 4 to 5 videos sporadically through the week. So also, if there's video topics or podcast topics, let me know. I just dropped a podcast today, Adam Talks, on IRS audit numbers. I did some research, spent some time, went back. I was actually last weekend, I spent a bunch of hours going through and diving into IRS audits numbers for 401ks, even found some info on IRAs because those are pretty hard to come by, even 990Ts for UBIT. So some good stuff in there, so check it out. Can we contribute to a traditional IRA in the same year and convert IRA to Roth? Yeah, of course. You convert it right away. You're just going to pay tax on the 6 or 7 or whatever you put in. If you wait, you're going to contribute and pay tax on also earnings if you wish. For FATCA, how is the IRA account owner of a single member LLC considered tax disregarded entity? Disregarded entity. That's what we're going to put. So my 5%, okay, Eric, it's the last one. My 5% fee was in fact the fill price 5% below the market. Official fee was only 100. The workers have no idea are getting a fill 5% below market in the implicit fee. Okay. I had no idea that getting a fill 5. Okay, good. Well, good. I hope you didn't get killed. I'm happy you didn't get killed on that one, Eric. But in the future, I've heard stories. Like that's why I said something. I probably heard 25 stories over the last year where people have called and said, Adam, you won't believe this. Like one lady, she paid 12% commission. They had her on the phone. I'm not going to repeat the company's name. They had her on the phone. And initially they told her 2%. And they said, listen, if you want to do this right now, we're super busy. It's 12%. And she got just super sucked in and she did it. And then, moved her account. But yeah, it's unregulated. Be careful. All these companies out there, we're a regulated trust company, but there are companies out there allowing you to do crypto trading. They are not regulated. Okay, these are former gold dealers that have no regulation. They're not regulated by FINRA. They're not regulated by anyone. They're not trust companies. It's the wild, wild west. They can charge whatever they want. Okay, if you don't say anything, they're going to get away with it. So if you don't use IRA Financial, that's fine. Just use another reputable company. If you want to look at all the reputable trust companies, go to Retirement Industry Trust Association, ritaus.org. All the leading trust companies are there, are members. If their company you want to use is not there, be cautious because that means they're not focused on developing and creating a proper and safe environment for your investment. So that's an FYI. Deborah, love to speak when it's good. Hit me up. You can email me at abergman, ABERGMAN at IRA Financial. Hit me up anytime. Love to talk to you. And again, anyone who wants to chat, always available. This is what I love to do. Even if you're not a client, my pleasure. I will answer your questions. Okay. If you can get me, I will even go back and do research and get you an answer. I get trumped all the time. There's stuff I don't know, believe it or not. And that is actually a great thing. Some of the most interesting things I've learned is from clients that ask really interesting questions that are kind of annoying, but at the end of the day, I'm really thankful for it because it makes me learn and pushes me to not be so comfortable and always learn. And there's always more. There's more to learn. There's always more cases to review and letter rulings to review. So everyone, I really appreciate you guys are awesome. Self-Directed Retirement Nation. We're getting stronger every day. Keep up the good work. We all can do it. We all can be 7-figure millionaires at retirement. It works irrespective of skin color, religion, where you live. If you do these 3 things, listen up, you'll be rich. I know it. I've seen it. Family, clients. Start early. If you haven't started early, start now. Okay? There's ways to make up for lost time like the solo K. Trust the process and be consistent. Just even if you can't, having a tough year, it's COVID, you can't put away a lot of money, put what you can away, whether it's $100, $50, $1,000. Just do it. It adds up. Your money grows without tax. It's called deferral, compounding interest, the 8th wonder of the world. It's how smart people get rich and smart people self-direct. So let's do it, everyone. Thanks again for listening, for watching. Remember, this is live. Subscribe. I like doing these once every 4 to 5 weeks. Keep you fresh. Give you a chance to figure out ways to trump me or challenge me. So let's do it. Thanks again, everyone. Be safe. Talk to everyone again soon. Be well.